Looking at the stock market performance in the so far this week, it's been bearish. We've seen the market closing in red on so many occasions, from Monday, Tuesday, and of course from what we saw on Wednesday, of course over 1,526 basis points that were lost. At the previous day session, over 1,700 basis points were also lost, as well as we saw the market beginning the year on the negative note there. A lot of stocks that did recorded massive gains last year are beginning to record price depreciation. The likes of Suno Assurance was one of the top performing equities in 2024. What is happening to the stock market early this January? Let me speak to my guest who joins me virtually from Abuja here. Steve Nwachukwu is a stockbroker and CEO, Steward Asset Mgt Ltd. He joins me virtually from Abuja. Good morning, Mr. Steve.
Good morning, and thanks for having me.
Let me quickly
Good morning,
get your take on
Nigerians,
the
and Happy
performance
New
of
Year.
the NGS this week. It's looking like the investors are beginning to take profit early of their investment.
Yes, that's what it looks like, sell-offs and some kind of restructuring of portfolios, which is expected that early January, first week of January, investors seems to restructure and rebalance their portfolio, and that's why you see some sell-offs. And also coming from the fact that the expectations are high, some investors who understands the market, who also read the lines of the market, knows when to make some sell-off or book some profits, having seen some good equities increase, or having some level of gains over 100, 200 to 300% at the end of the year 2024. So yes, it's expected that January we see some sell-off. That's why most often we say that January is always optimistic conscious trading, in the sense that in as much as the goods are there, the fundamentals are there, investors trade consciously as a result of the expectations of dividend payment, where perhaps some of them are trading above their intrinsic values, or the expectations that investors have on the ratio of their dividends they will pay to investors. So, like I said earlier, it's a time to rebalance portfolios and make sure that you make the best of the moment.
Indeed, they're talking about making the best of the moment. The big boys are also not left out there as well in the portfolio rebalancing, like you rightly pointed out. The likes of Dangote Cement, Dangote Sugar, of course, Nigeria breweries are also facing massive price depreciation on the floor. We've seen that this week so far. How long do you think this negative sentiment on NGS will last?
Well, to be honest, the market is still in the positive. The market is still in the positive. Year to date, returns is over 0.8%, which is about 81 basis points. The market price is still, the overall market perception is still in the positive with over 81 basis points. But having seen some heavy sales and heavy transactions or activities that drove the market in the last 4 trading days, where we saw the market lost about 2 trillion, given the fall or the sharp fall in the price of Dangote cement. Have in mind that Dangote is the most capped stock quoted at the floor of Nigerian Stock Exchange. Dangote cement controls close to 2 to 3% of the market capitalization at the floor. So when you see a fall in such prices in a consecutive manner, definitely you will see the stock depressed entire market, in the sense that when a stock that controls close to 2 to 3% or 5% of market cap falls in price, it simply means that the general market tempo will reflect such negative trend. So expectedly, yes, the index will recover from this in the days or weeks to come. And we are seeing also a kind of bargain hunting in the shares of the Dangote cement as we speak today is coming back again. and possibly by the close of trade today, we may see some rise in that stock price, or we may see some level of stability, which is expected. Having lost about 3 consecutive times, we expect that the market will correct itself today, or the share price of Dangote may reach.
Hello, Mr. Steve. Okay, Mr. Steve, they're talking about how the market may likely going to end today. They're talking about market correction there, and of course, okay, Mr. Steve, if you're back, can you continue along your thought? We lost you momentarily.
Okay, what I was saying is that we have seen some momentum building in the stock of Dangote cement that have resulted in what we've seen the last 3 consecutive trading. We have seen some level of bargain hunting. We have seen some level of stability. We have seen some level of an improved confidence in the stocks. And definitely, once you see that stability in that stock, the market may reverse most of the loss we have recorded in the past 2 trading days.
Indeed, talking about recording the loss so far on NGS. Let's talk about First Bank. First Bank has been in the news lately with regards to issues between Mr. Otedola, the chairman of the bank, and of course the owner of one of the big media in Nigeria. There, how much of an effect do you think that back and forth will have on the bank's performance?
For sure, First Bank is the only quoted stock among the 2 parties. The hydrocarbon energy company and oil company is not quoted, so it has no effect in the market. So far, we also have seen some level of stability, and to be honest, we shouldn't see any fall or direct effect of such media trials and public opinion seeking measures that 2 companies have resorted in the last 2 or 3 weeks. Having to come to the public with some issues regards to their business transactions, which is before the law courts. I don't think it will have any effect or negative effect in the shares or the performance of First Bank at the floor of Nigerian Stock Exchange, given the fact that, yes, of course, the First Bank is trying to recover their debts. They are trying to stick or make sure that all their non-performing loans are well recorded, or some sort of recovery, like I said earlier, to make sure that their balance sheets and their books are reflecting such numbers. I think, like I said again, it will not have much effect in the trading shares of First Bank at the floor of Nigerian Stock Exchange, because the issue in question has nothing to do with their performance, rather their recovery of their bad loan. Thank you.
Indeed, talking about recovering their bad loan, Mr. Steve, do you think First Bank is embarking on this journey because of the CBN recapitalization process? Of course, they have about March 2026 to get that done. Do you think they are doing that to meet up with the CBN target?
Well, that has nothing to do with their recapitalization, because as much as I know, CBN directive, and which First Bank have also successively, done their share raising, which they raised close to about 350 or 360 billion naira successfully. So it has nothing directly connected with their recapitalization quest as directed by Central Bank of Nigeria. It's just a question of their cost of doing business. Some of those loans they have lended to institutions, to individuals, they need to carry their required measure to make sure that those loans are recovered, and that is what it takes. And beyond that, it's nothing else that has to do with their recapitalization quest. Like I said, the First Bank have successfully floated or executed their 360 or 350 billion worth of market share offer, which they did a couple of weeks or months ago. They concluded, I think, in the 3rd or 4th week of December 2024, and it has no direct impact or direct connection with the recent happening with one of the oil companies. Thank you.
Indeed. Let's switch gear now, Mr. Steve, and talk about inflation. Nigerians are worried, and of course, the organized private sector is raising concern about the continued hike in the inflation rate in Nigeria, stressing that this will continue to further raise the cost of production, the raw material costs, logistics, and indeed machinery. Of course, as you know, on Wednesday, the NBS released the inflation number, which showed that Nigerian inflation increased by 0.20% from 34.6% to 34.8% in December 2024. Of course, the last inflation numbers for 2024 was indeed released yesterday. What do you make of these numbers? Is it in contrast to the federal government target for 2025? Talking about the 15% target in the 2025 budget.
Well, to be fair, I think the numbers, the increase is marginal, about 20 basis points, notwithstanding that the 34.8% inflation, headline inflation rate is still one of the highest, is a record-breaking rate. But the marginal, it was a marginal increase from a 34.6% to 34.8%. But coming to the facts from the physical structure or the desires of the government that they want to see inflation reduced to about 15%, I think is just a wish, and it's not visible, in the sense that given the current realities or data and statistics suggest that we can't have anything less than 33, whatever you may have done to reduce the inflation to somewhere around 33%. So the 15% is like a wish, a mirage, government being illusionally thinking that they can, drag or force the inflation rate down to 15%. Maybe just for that, the nomenclature of the government having some level of unrealistic numbers, or perhaps to run with such narratives or run with such symbolic pronouncements that cannot be attained. 15% projection by the government, like it takes a projection, it remains a projection, and it remains the wish of those in the corridors of power, but nothing seems realistic that these numbers will see somewhere around 25% by the end of the year. Like I said, is a wish that we have the inflation numbers reduced to 15%. But as we speak, it simply means that government needs a lot to do to at least even maintain the rate or the trajectory we have witnessed. Like I said, 20 basis points is marginal, but it's still in that very growth trajectory, and we need to stop it and nip it in the bud by putting up basic physical structures, physical programs that will address these inflationary factors that we have seen as a result of increase in our petroleum costs or energy costs, increase in the cost of doing business, increase in all areas of productions, and which government needs to address them. Once that is well addressed, yes, we may see an inflation rate that may abate to 30% or to somewhere around 28% by the end of the year. But the visibility of the 15%, it remains a dream. Thank you.
Indeed, it remains a dream, according to Mr. Steve there. Let's look at the urban inflation. The urban inflation is standing at 37.29%. Of course, if you look at the rural inflation, is lesser, 32.47% there. What do you think? Why do you think we have these discrepancies? Is it because of the rural-urban migration that we have had over the years?
Well, basically, that is the structure, and that is how it ought to be, in the sense that things are more costly, things are more expensive, things more expensive in the urban area because of the lifestyle, the luxury way we live, and plus other activities that may contribute to the high cost of doing business or high cost of items, and which you cannot take away movement of these very product and services from the hinterland to where they are actually needed. Take, for instance, the perishable, the consumable, the food items are moved from the rural to the urban. So definitely the cost of moving them alone, the transportation or logistics is an additional cost. That's why definitely there is this very difference between the urban and rural inflation rate, given the fact that yes, things are more expensive, things to be more expensive in the urban area than in the rural area. But speaking to that number in the urban inflation, it's also speak to what the urban pulse will be passing through. An average urban poor will be forced to be buying things at exorbitant. They are faced with high costs of transportation. They are also faced with high costs of homes or rent, and they are also faced with high costs of electricity. You know for sure that a good percentage, or in fact, the 95% of the band A are all located in the urban area. The new tariff in our electricity, which is the band A, which is far more than 100% above the band B and band C and band E. You found out that it is the urban dwellers that pays this band A rate or tariff, and most often those in the rural areas are perhaps lucky to fall within the band C, band D, and the rest of the band. So these are realities, and that is why the urban poor continue to suffer the fallout of this very development. Thank you.
Indeed. Let's look at on a month-on-month basis. We saw inflation very high in states like Kogi, Cross River, and Sokoto State. If you look at the slowest rise in Yobe, Kano, and of course the FCT here where we are. Do you think these numbers did reflect the current reality, especially when you look at the slowest rise in FCT?
Well, sometimes it seems ironical, and it also seems like, well, yes, we have to believe the numbers coming from the National Bureau of Statistics. They are one of the reputable institutions of government, and we should work with whatever numbers they have. But speaking from the point of reality, you find out that some of these states, you may not be able to fathom why most of these states that are not economically viable, and we still see their inflation rate up. What are the basically activities that goes on in these states that may drag their numbers above the national average or above their peers? So I think that's what some of these state governments, the sub-national leadership, need to be chewing those numbers and see how they can apply physical measures to address what is driving most of their high costs of livings or their inflation numbers reflecting above the national average or above their peers. For instance, it is believed that the confluence state, which is Kogi State, will continue to witness this as a result of the fact that it is an exit or entry, a transit state, in the sense that a lot of activities of people moving in and out, accessing the northern Nigeria and accessing the southern Nigeria. So definitely cost of things will be a bit higher because it's a transit state. So most of these factors needs to also be understood well. And also, like I said earlier, it is best for the states and sub-national government to digest these numbers, like in Sokoto State, to know why they are actually having these very numbers reflecting in a very damning to their economy, in the sense that we cannot have a state like Sokoto, the poverty rate is the highest, and you are still having a higher inflation rate.
Absolutely.
These are what the sub-national government needs to be digesting these numbers and see where they can address this issue with the physical measures or physical programs to reduce these numbers in the months ahead.
Yeah, of course. Talking about reducing the numbers in the month ahead, there's a plan to rebase Nigerian GDP this year. Of course, as you may be aware, the CBN has shifted their monetary policy committee meeting scheduled for this month to February, while awaiting the GDP rebasing and, of course, the inflation numbers as well. What do you make of the GDP rebasing? And, of course, what decision do you expect from the CBN, moving their MPC meeting at this point in time?
Okay, first on the rebasing, basically it's meets all merits to rebase the Nigerian economy. It's a ritual that's in half a decade or in a decade that we need to rebase our economy and to add up the realities, the new developments, and see where we need to also do better in the days or months ahead. Yes, it's really meet the merit to be rebased. The essence of rebasing, like I said earlier, is to bring in and accommodate or perhaps reflect the new developments that have happened economically wise in the economy, so that we can have a true reflection of our GDP, which is the gross domestic product. We have seen also some level of improvement booming in the telecommunication. We have also seen some level of increased activities and a lot of jump on openings in our cyberspace, where we have also seen some level of activities in the tech industry. So we need to actually rebase so that we can have a true reflection of what the size of economy or the size of economic activities that goes on in this area. So it makes all the merits to rebase our economy. But let's do it. Also, what I will urge the institutions that are involved in doing this, let's do this rebasing with all sincerity, with all available data, not diluting or overhyping any numbers to perhaps maybe favor the government, or maybe also paint the government in the bad lights. Let's use the right data to run this very narration or run this very process, so that it can reflect the true or it can reflect the true position of our economy based on our GDP wise. So it's important we rebase. Then, speaking to shifting of the CBN monetary policy rate, yes, it also perhaps in the decision of the CBN to wait from the numbers from the MPS, or perhaps they have also seen there is no reason to have their MPC meeting January, and February is just a weeks or 2 or 3 weeks from now. So why should we have a meeting when we have not really seen the effect of the December November rates that we actually raised by about 25 basis points? I think they still need to, wait more to see how much these very adjustments they've done in the recent times have actually impacted in the economy. And like I said, I keep saying that CBN expectation from CBN will continue to doom us. Let's expect less from the monetary policy and expect more from the fiscal policy makers. Measures like reducing the cost of transportations, measures like reducing the cost of energies, measures like reducing the cost of production will address the inflationary factors, measures around our exchange and stable exchange rate and a moderate exchange rate. 1,500 naira is not realistic. It will continue to fuel inflation. So these are measures we expected from the fiscal. So CBN, postponing their MPC meeting, perhaps it's because they don't have much to contribute, or no adjustment will actually affect much or reflect much in the economy, except these very fiscal measures are taken. Thank you.
Fiscal authority interfacing. There seems to be more, coming from the monetary authority than the fiscal authority. We see them trying to manage the exchange rate, even though we've seen a lot of instability and volatility in that segment of the market. What do you think is indeed the problem? Because CBN appears to have done so much to bring down inflation, but yet the impact is not really being felt in the larger economy. You can testify to that, Mr. Steve.
Well, saying that CBN have done so much, I think it's also hyping what's
Well, in terms of raising
an
the
empty
MPR,
wall.
monetary policy, talking about raising MPR rate.
There are two perspectives to look at it. Whatever CBN have done is just their measures, their handicaps. Sometimes I do say that CBN is actually in a dilemma. What should we do? Most often, raising those interest rates is as a result of the vacuum that have existed in the fiscal authorities, the flow of cash within the system. We have seen in the recent days or months that a good percentage of money supplied to the system are not moving into any productivity. In the last couple of weeks ago, we saw the federal government, through the FAC, shared among the federating states over 1.4 trillion naira. Ask me, out of this 1.4 trillion naira shared among the federal, state, and local government, how much of this money move into productivity? A good percentage of this money goes into just velocities, and these are the things that is fueling inflation. So this is why I said CBN's most times is handicapped. Money supply to the system as we speak is close to 109 trillion. The last data from CBN suggests that the money supply to the system is about 109 trillion. This is why CBN will continue to have the tightening measures, because the money in the system is chasing after few goods. And have in mind that we are not an export driven country or economy. We are import driven, and most often our productivity is quite low. So this is why CBN, sometimes I see them as being confused, and the lack of things to do, so they will continue to hike. Once they hike this rate, it simply means they've done something, and in the real sense, they've done nothing. So yes, is a measure on the side of the CBN to either adjust the numbers in positive or in negative number based on whatever available statistics and variables around the current reviewing month or current reviewing period. So most often what CBN have done is a measure, but they are all empty measures as a result of the vacuum created by lack of planned fiscal policies or fiscal programs that will address the structural and fundamental things that cut across the earlier issues I've raised around costs of doing business, cost of production, energy costs, cost of fuel, and the rest of them. These are the things that CBN needed the fiscal authority to address. As we speak, we need to ramp up production, a budget benchmark of 2.06 million per day. So if you have something above 2.4, 2.5, that will help the exchange market. Perhaps we'll have something around 1,000 or 900 for a US dollar. So that we actually see some level of magic that we expected in the inflationary number. So I think the CBN is handicapped, and they will remain handicapped until we start seeing some good measures from the fiscal authorities. Recently, we heard of the Port Harcourt refinery coming on stream. Recently, we also heard of the Warri refinery. These are the kind of measures that will ease. Once they are coming on streams and the prices of this very energy or petroleum product are coming down, it will naturally ripple. It will naturally rub off on the inflation numbers. Thank you.
Indeed, Mr. Steve, there is no time for me to ask you about what you expect from CBN. I mean, talking about their MPC meeting after GDP rebasing, that will be a talk for another day. I must thank you for your time, Steve Nwachukwu, Stockbroker, CEO, Steward Asset Mgt Ltd, for your contribution on the show today.
Always my pleasure. Thanks for having me.
All right, thank you so much. With that, is a wrap on the show today. We'll be back again tomorrow. I am Yusuf Akubu.